Hi ladies and gents, welcome back to another podcast. What we're going to look at today, predominantly at the sales journal, but we're also going to look at statements of account. Okay, first of all, we're going to start by looking at the statement of account. Well, what is it and why do you need to know about it? Well, you need to know about it because it is a source document. It's in quite a few specifications, and the bit of information it's actually the source document for is the cash discount. It's the only place that we actually see a record that goes between the supplier and the customer of any cash discounts following the payments of monies owed. Okay, so what is a statement account? Well, basically, it is a statement sent from the supplier to the customer, and it gives a detailed breakdown of all transactions between the supplier and the customer. So if we have a look at the one I've done here as an example, we'll have an opening balance. Occasionally, you'll also see that opening balance as a debit entry. You then see that this customer, JR Fashionable Ladieswear, have purchased $500 worth of goods from Superwet Clothing, and they've then made a payment. They've paid the original $750 they owed, and that's made up of two elements. One is the actual check, and the other one is a cash discount associated with it because they paid within the stipulated time. And here they've made another purchase of $650, and then we've got a credit note here at the end, and the credit note shows that it's going to reduce the amount of money that is owed by JR Fashionable Ladieswear to Superwet Clothing. Things that you will always see, you'll normally see an account number, and that's the account number for JR Fashionable Ladieswear and Superwet Clothing's books. Date when the statement was sent out. This bit here is a little bit different to anything you've seen before. It's called the running balance. So it basically means that they owe $750 at the start of the month. During the course of the month, they have increased the amount of money that they owe because they've made a purchase. So they now owe $1,250, but they've then made the payments, and with the payments and the cash discount, the amount they owe is reduced to $500. Further purchase has increased the amount of money they owe by $650, but then they've gone and made a return, and that's reduced the amount of money they owe. For those of you who are very observant, you've probably noticed this is very similar to the actual ledger account. So it's done from the supplier's point of view. Debit entries go where a debit entry would go in the T account for JR Fashionable Ladieswear and Superwet's accounts because they increase the amount they owe. The credit entries, they're there because it reduces the amount of money that this customer or trade receivable owes to the business. And the final thing that you'll also see is you'll see the normal settlement terms for the cash discount somewhere on the document. The other thing to notice is you'll normally also see any invoice numbers or credit note numbers recorded. And just be careful, as a question that does come up in some of the specifications, what things could you expect to see in a statement of account? As you're probably expecting by now, I've given you a couple of questions. The first one's a straightforward, you've got all the information and you need to put it into the right places. The second one, you'll also need to do some calculations. So you'll need to calculate the cash discount. You'll need to calculate the actual payment received. So what I do now, I pause the video clip and I quickly go through the exercises and have a look at your answers as well, check your answers, unless I've sent you a copy of the spreadsheet without the answers, in which case it's a homework and send it back to me. Welcome back to the second part of this podcast. The second part of the podcast is relatively easy because we've already done two journals. We're going to look at the sales journal. Sales journal, sometimes called sales daybook, and it's sometimes called the sales subsidiary book. Looks very much like the other books that you've already seen. It's far more common to see in there now the gross total and the trade discounts, because firms very often want to know how much discount in total they've been giving people, even if it doesn't get recorded in a ledger account anywhere. Quite straightforward what we need to do. So we've got a Home Furnishing, they made two purchases from this company. So we enter the sales on the debit side. The reason why they go on the debit side is these are customers, they are going to owe us money. And that's on the first 11.15 and for 7.80. And the other one was on the 30th 11th, and that's for 500. And don't forget, we're putting in the net totals, not the totals, the gross totals. It's always the after trade discount figure that goes in. B&Q made one purchase. And that was for 900. So that's a sale for this company. And the final sale was to somebody called the Sultan Center, and that's worth $225.60, and that was on the 28th. Okay, as with the other journals, to save time making all the individual entries, we're then going to make one big post for the month for the whole of the sales. And that's come from the sales journal. And the total 2405.6. And just a quick double check that I've done everything correctly. So we can go sum, add up the 4 entries, 240560. So this time I've done it properly. Okay. What I've done for you, as you probably expect, I've done 2 quick exercises that you can do. And again, check your answers if I've given you copies of the spreadsheet with the answers done. Alternatively, to homework, send them back. Hope you've enjoyed this podcast. I'll be back shortly with a sales returns journal, and we're also looking at the credit note. Thank you very much. Bye-bye.